All right. What's going on, Tycoon? Super excited for today's video. We're going to be doing a little Tycoon Tidbits podcast episode. We got Zach here and Leon, two of the admins from the Options Trading Tycoons Discord. And we're going to go ahead and kick this off with a little bit of cryptocurrency talk. We'll get into the stock market later. But we were just talking about VV before we started recording. Leon, why don't you let us know what you were reading there on VV?
All right, so Vivi is the fourth grossing entertainment app, and it's like a digital world of collectibles, the NFT space. So what's interesting about this is, as Zach mentioned and like literally coined, that Marvel and Disney are like releasing NFTs on Vivi. So that's the big thing. I think one thing that Zach mentioned as well, which would help a lot of people that want to buy NFTs and want to get into the space and have longevity in it past a point where it's a hype, liquidity. So NFT liquidity is very important. So what's going to happen when that hype ape or whatever NFT that you have, crypto
the mutant apes are the new trend now.
Yeah, what's going to happen when it's not popular anymore? Like, so reputable companies like Marvel, like Disney, that have actual comic books, as you can see that he pulled up, and that people are still selling decades later, 50, 60, 70 years later, or would sell 50, 60, and 70 years later. With the NFT space, you can kind of go forward in time with the technological expansion of things that are doing, things right now. So I think that's the big kicker for me, like buying Marvel and buying, Disney.
Yeah.
You got me there. You got me.
Yeah, I like the words. I like using legacy brand, right? So if you can find some legacy brand type NFTs, right? Because you were just showing some comic books you had, some original Pokemon cards you had. This was way before NFTs were a thing. So, this is the dawning of it. If you can capture some NFTs right now, of some legacy brands, perhaps, that might be valuable. Now, will crypto punks hold their worth 5 to 10 years from now? They may or they may not. They may create a new elite club with really expensive NFTs that celebrities and millionaires and billionaires will get into. But Disney's been around, so maybe if you can get the first edition of this type of Spider-Man NFT, right, or this type of Batman NFT, those have, in my opinion, a better chance of holding a little bit more worth of long-term value, as you were saying. Just to kind of spin off of VV right there. So
And go down
that's
a
a
little bit.
little
Go
bit of
down,
crypto.
because it's on your screen. So go down back to augmented reality. So
Yeah.
as well as the brand new things that are coming out right now. So
Yeah,
that
so virtual showrooms right here, and then augmented reality. Why don't you give us your take on virtual reality and augmented reality? You've been talking about it for over a year.
man,
That's something we can kind of talk about a little bit.
you know what's crazy? So Aon is on here with us. He's under the Beautiful Barless logo, one of the other businesses. But yeah, augmented reality and virtual reality, I've been saying for like 2 years before anybody was really saying it. And it's funny because Aon brought that up to me, and I was like, damn, I guess I have been doing that. But I felt like Facebook was going to be in the forefront, might
Yep.
not be,
That's
the
why I'm
only
looking at the
person,
Facebook stock
or
right now.
yeah, it might not be the only company, but would be one of the major companies. And to me, I looked up something called Lost Layers. Now it goes with the NFT and the AR VR space, because Lost Layers are what enable Pokemon Go to be Pokemon Go. In order for people to be able to drop items in the real world, and you can look it up on Pokemon Go. Let's say if you got like a hidden item and you drop it at a certain location, that's something with Lost Layers. So you could do a lot with that, with like artists, with with creators, period. Like if remember when Kanye had that pop-up and he had a whole movie on the side of a building, and it was like a movie trailer, or he was like doing music videos or whatever. Like, you can do so much with it if you say, hey, in this space, or let's say Central Park. In Central Park, there are Kanye West Easter eggs, or your favorite artist Easter eggs and they're collectible NFTs in this park. So if you find them, you can mint them for X amount or whatever. You know what I'm saying? You can pick the parameters, but AR is what's going to be able to allow people to not have to have an Oculus. You could just use your phone. And I think that's the most important because a lot of people can't pay $300 for a certain device, but it's going to be to the point where, you know, even the cheap phones like Metro PCS or Track Phone or whatever, you're going to be able to have those smartphones and just use that AR, and you might be on the come up. So, you know, everybody wasn't shopping at Whole Foods all the time. Maybe you had to budget, and now you could budget with that low budget phone or whatever, make some, you know, some AR connections with that space. And, you know, I think it's a wide range of tools that can be utilized in the AR space, not only VR.
Yeah. So to spin off of that and to continue on to that, I got this article pulled up here. Because recently Walmart's been making headlines, right? You saw that. Walmart announced, you know, they're publishing to follow their own cryptocurrency and things like that. You know, so this and you know, this video started trending on Twitter, and this is a VR shopping video, right? But as this article states, you know, this clip is from 2017, right? So it really shows how aged the metaverse already is, right? So, you know, as you're speaking on virtual reality and augmented reality, companies like Walmart have already been in that field. Okay. They were already working on virtual reality in 2017. Technology has developed even more to the augmented reality, right? And so Facebook is a stock that you think is really good to play that. You know, they could be a leader. Walmart has already been in the territory. And I think that with their cryptocurrency and if they can you know, move on to the blockchain, that'll really help them. And, you know, it could push AR and VR really far as well. And now that's going to segue me into the next point, basically, that I want to bring up, which is about Phantom. Okay. While we're on the subject of cryptocurrency, Phantom is definitely top 10 project to like 10x or 100x in this year for me, right? Shopping.io just integrated with Phantom. Okay. Now, shopping.io, I'll go ahead and pull it up here, is the only international cryptocurrency on ramp that allows users to spend crypto on global e-commerce websites. Due to jurisdictional requirements, USA residents cannot currently pay in crypto, yada, yada, yada. But basically, what's going on is, you know, they're the first international crypto e-commerce onboarding and fulfillment service. All right. They're the only company in the crypto space that allow you to purchase from major e-commerce hubs such as Amazon, eBay, Walmart, and Home Depot on a global scale. All right. So that is really, really big. And a lot of these things are happening behind the scenes while nobody is paying attention during this, you know, kind of crypto FUD right now. Everybody's, you know, not really too excited to buy crypto right now. And I think that now is actually a really good time to start buying some. It can fall lower, but you know, when you look, you know, overall, you want to be buying the dips, and this has been a nice dip on crypto. And you know, things like this happening more and more, where now you can buy crypto with Amazon. You know, you use crypto basically to make purchases from Amazon, eBay, Walmart, and Home Depot. That's really big. Now, Phantom is known for being like one of the fastest blockchain networks. So, as far as like transactions, I believe. So not only are the transactions going to be on the fastest blockchain, but you know, they're the only people, they're the leading cryptocurrency platform doing this. So you know, I just think that that's really big news, especially for Phantom. And you know, I just see that going a lot further. All right. Now I heard some alerts there. You got any stock news you want to talk to us about there, Leon?
The market's dropping. Yeah, we pretty much knew that. Matter of
Oh
fact,
man.
go to /ES, and I can show you. Go to /ES on the 1 hour chart,
All right.
and you'll see that on the 1 hour chart we got 3 black crows. Scroll in a little bit. Boom, 3 black crows, which is a bearish formation. It's like stair steps down.
Yep, I like it.
And I think that we can drop to about 45.30 to 45.20. It's
So
been,
that would put us in right around this little oval right here, which I can see that, you know, on my chart. I got a demand zone below here, down to like 45.16.
I would say 45.40. I would even bring that little zone right there down to like about 45.40, and that I would extend that to about 45.40. Yeah. because it might test that and try to come back up. Boom.
Mm-hmm.
That's where it's going to test that. And then if it comes back up, it will have to make a higher low. So it's going to have to make a higher low and then a higher high. I don't think that's going to happen before we hit like 45.20, 45.30 area. But if we are to make that run, we're going to have to do it within that zone right there. So
oh shit, sorry.
I just got my alerts going off because yeah, for me, I want to catch specific moves, and
Yep.
I'm waiting on specific moves. So I'm gonna let all this. I think we're ranging right now in the market. So I'm gonna let all this play out. Yeah.
Yep. Now let's take a look at VIX real quick. Okay. So here's VIX with just a couple things drawn up. Okay. We have a little bit of some of the past bearish divergence on the 1 hour chart, right here. And then this one most recently today. And then, there's a nice big drop. Okay. VIX went from like 24 down to 22 and, like 2 hours. That was, it's a pretty big drop, right? So and then we have that nice big juicy gap down there. What's your takes on this gap on the 1 hour chart? Is VIX going to keep going higher? I can zoom out a little bit more to like a daily chart or something if you want. This is pretty naked chart right here.
Well, what I see, to be honest, I'm gonna actually send you a screenshot of what I see on VIX because I want you to compare real quick. Boom. Sorry. There we go. My bad, I got multiple screens, so I'm just.
Are you sending it here? Where?
I'm gonna send it to Discord, to the group. All right, it should be in there right now, so you can compare that with what we're looking at. See it? Boom. All right, so I already charted out the support and resistances on VIX. So this is just VIX by itself, right? This isn't VIX futures, which we'll talk about later. So what you see is it looks like it's squeezing down on that TTM squeeze, but we keep going bullish, but we haven't breached that 2385 level of resistance. So I'm thinking we're going to break down soon if we don't breach that 2385 level. And when we break down, we're not only going to reach that. What level is that? That is
21 to like 19 area. Is that gap you got drawn up?
Like 1929. So 1929, we're going to probably get back there. I see 2117. I have that support right there. My first support initially is 2256, then 2117, and then 1977, and then we drop there. Understand that in between all of these are also support and resistances. So I just like to be clear cut, like, okay, boom, if it doesn't get.
So explain it to me like I'm 5 right now, okay? Because the past 5 the past week or two has not been pretty for the market, okay? Shares are not looking good. A lot of Cathie Wood stocks are down. How can people track this, and why are we in the options trading tycoons like looking at that gap down? How like what's our strategy to play that? How are we going to make money from that? And just kind of explain, what VIX really is and how, crucial it is, and how much it can help give you an edge in the market, right? Especially for new people and experienced, inexperienced and experienced traders. Having a good relationship with VIX is going to be, crucial to making you a profitable trader. So, just break down basically how we're playing this right now.
Okay, so it's gonna be like an advanced 5-year-old to know what VIX is, but excuse like the the no shave and the it's the pandemic, barbers are like out of work and stuff, and yeah, in Florida, we're in Florida, bro. It was 60 degrees this morning and it's 80 degrees outside now. I got like shorts and a sweater and a scully on. I don't know what's like in an umbrella just in case. But if we're talking about VIX, we're talking so VIX is the volatility index, meaning it goes the opposite way of the market. Now, if we want, the way we use VIX is if VIX is dropping, then the market is going to pop and the market is going to go up. If VIX is going up, then the market is going to go down. So that's how we use VIX. And it's almost like a tool to kind of give us confirmation on our analysis. So if we see VIX is going to drop and fill a gap, the gaps are important because like 9 times out of 10, gaps are going to fill in the market. Like you can say gaps aren't going to fill. I guarantee you, if you look in the future or in the past of that stock, it filled. You just didn't realize it did because it was so far ahead or so far behind. So gaps tend to fill in the market 9 times out of 10. It's just when they're going to fill. So when he's looking at that gap on the 1 hour, if we can catch that, as you can see, bearish divergence right there, even if you don't go as far back as last Thursday or the Thursday before last, if you go from last Friday, it's still a bearish divergence. You know what I'm saying?
Last Friday was right here, right?
Right, exactly.
So let's just do that. Yeah, let's show that.
Bearish divergence. Even if you do that. Now, if you extend that a little more, what I do is if you extend that a little more to the right, then you'll see that, yeah, boom. So it's still a bearish divergence. And bearish divergence means that the market is looking like it's supposed to go down, but it's still going up. Bullish divergence means it looks like it's supposed to be going up, but it's going down. Now, the trick is finding out when that is. So because it looks like it's supposed to be, price action is saying it's supposed to be going down, and then there's a gap, there's a good chance that we're going to get a bullish run soon. And then you have that pin, that pin bar right there, which is an inverted hammer candle, whatever you want to call it. People call it inverted hammer, pin bar. That's a reversal candle. If we don't get above that, then that's going to tell us, hey, we're trying to go lower if we make a lower low. And if we lower high, it's probably a wrap. On that lower high, you'll probably want to get in because that'll probably be the gap fill. So in a nutshell, we look at VIX to play the market. Okay, VIX is going up, it gapped up. It's probably going to be a continuation gap. It's probably going to still go up. Market's going to drop. Okay, we want to grab puts. Market's going to go down.
Yeah, and we've been hedging, and we've been grabbing a lot of puts in the options trading tycoons Discord. And that's basically betting that the SPY, the S&P/ES or SPX, whichever one you choose to trade, but those are the main ones that we like to trade in the Discord, basically betting that it's going to go down. And if you look at the recent history, it's been going down. Okay, it pops and then it goes back down, and then it pops and then it goes back down, right? Now we're going to zoom out a little bit and we're going to look at some different charts right here. Okay. So originally we were looking to see if we were going to catch this trend line bounce right here, and we didn't. Okay, we've fallen more, and that's why we've been keeping these puts, right, in case we don't bounce here. So I want to pull up some of these other charts here and just look and kind of have people prepared for what kind of like if something bad happens, okay? Because we have some ideas maybe of what could happen in February to the market.
Hold on, do me a favor.
What's up?
Put a clear chart up right quick. Put a clear chart up, like with nothing on it. So this is the daily, right?
Yeah.
Okay, watch this. Now you see, yeah. So from about, from right there, cool. Now you see what we're seeing. Now go to the weekly. This is the daily chart. Go to the weekly chart. Now I want it from about, what is that, from October? Just, no, just highlight from October. Just, yeah, there you go. Scroll out a little bit. Scroll out a little bit. Yes. Now, what does that look like to you? If you go from, let's say, what is that? Not there. No.
Something like this.
If you go from right before October 1st, right there. But the bottom low, check me out. The bottom low from November 1st.
Okay, I got you.
There you go. From that low right there,
Mm-hmm.
all the way across horizontally. You see that?
Yeah.
Yeah.
And we're gonna go ahead and draw this for everybody.
Boom. And then extend that to the left. So you can right click, extend the left, boom. And you can see even back in September, it respected this on the weekly chart. Back in September right there, boom, boom.
Yep, September, late August.
Right. Now what we can do is we're looking at October 4th. Draw a line right there. October 4th, that right, yeah. So not at the low, but at the open. Let me see.
I got you.
Yeah. And then extend that to the left. So now what we're looking at is over at July, you can see July right there. Yeah, that candle right there to the left. Boom. So as soon as it got above this resistance, on that very next candle, it made a pin bar because it was trying to stay above. But also a hammer candle, like whatever you want to call it, but couldn't stay above for that next week, fell below, too much selling pressure, but it bounced off of another support that we're not going to draw, and boom, got above that resistance, stayed above it for the next week, and went above to the next resistance. So why is this important? Because when it got rejected here, September 6th, it went right back down to that support. So if you were a swing trader and you were thinking, all right, boom, it got rejected on the weekly, you're scaling down to the daily and you're looking at, okay, I'm gonna get in on this day because I see it touch this, didn't get above here. You're looking to go on puts for that big move. You're looking for like a month out because you're already knowing. So right there, when it got rejected from the support, it bounced all the way up. As he's going, yep, it made 3 white soldiers, which is a bullish confirmation or bullish pattern, and it got above that resistance, and boom, it hit another resistance up top there that I would probably draw at the very next one. Yeah, right there. That's where I would put it at. Yeah, right about there. Yep, exactly right there. So what we're looking at is it looks like a triple top. And if you're looking at today or this week, it's really trying to sit above that support level for this immediate candle. If we get below that candle,
boy,
see where this is going? So I'm thinking that it's Wednesday. It was a short week this week. Monday, usually the day after the observance of Martin Luther King Day, the market drops usually like, I would say 65%. Don't quote me on that percentage, but that's just what I've been looking at for the last 10 years. And it's looking like it's really trying to bounce at that level. If it doesn't bounce at that level, then I think the last stand could be right where that candle is right before December 6th. That low. Yeah, I wouldn't do it at that low. I would put it right where it lines up with all. Yeah, I would put it right there. That is pretty much the last stance for me. I'm gonna tell you why. If you extend it to the left, as you know, you probably knew I was gonna say that. If you extend it to the left, you can see that over here, it really supported that, and it bounced off of there October 25th. So that red candle, that's a spin it right, boom, right there. It bounced right off of there, and that's how I got up. So to me, if we drop below this support, that will be the very last stance before we drop all the way to that next support on the daily and the weekly. So that's what he's looking at. And then if you look on the daily, it's looking like a head and shoulders from December 6th to now. So I don't know if you know how to draw the targets on the head and shoulders. That's the left shoulder. We literally just drew that just now. Yeah, boom.
Right.
So
there's your head and shoulders.
We're hoping this doesn't play out, but let's not be fools. You know, if it loses that level, that next level is like where our last stand is. But let's be clear. This is the reason why we think it's going to drop even more. Let's go ahead and do them gap fills right there in October. Let's just highlight those
So
because
let's look at some of these levels, because I have the gaps charted up. And I got a chart for the gaps, right? So basically we're looking at 453 and 450 right there is that level, and then we got one down here around 432, 433, right? I got the gaps somewhere on one of these, sorry. All right. And so this is like my correction outlook, right? Like kind of like my bear market chart, you know. So yeah, so if we don't find support at those two levels that you had earlier, the at the like 450 and the 453, right? There's two daily gaps down, man, that are just like, come February, if February, people say it's historically a bad market. I mean, it's been bad already, man. I mean, it went down from 480 down to like 453 right now. I mean, we could fill these gaps down here to 447, 448 area, and then we have another pretty big one down to like 435, you know. So that is definitely something to watch out for, that I think everybody needs to watch out for. We broke this little trend line right here at the top, right? Like, okay, so basically this was our resistance, and we were trying to see if we could flip that to support, and it's just basically acted as a resistance still. And we're just trading a little bit below that now, and it's just gone lower. I really wanted it to find support at like 455 today. And we didn't. We found some support there yesterday, but we're breaking that support, and we'll go back to that one chart so we can see here. But as soon as we break that 450.31 level, I really think that we're gonna get that gap fill. Okay. So that's basically something that I think you're watching, I'm watching, we're all watching. And the only thing that kind of suggests that the market could go up really is this. We have this 1 hour gap down on VIX, this really big gap from 21 down to 1925, 1930 area. So we gotta keep an eye on VIX, because the signs are kind of leading us like, hey, we're about to crash, we're about to fall, we got these daily gaps, we're breaking these trend lines. But here we are with VIX with the 1 hour gap down. It kind of leaves me a little bit too unsure, of where exactly we're gonna go. There's signs where the market could drop really, really hard, and then if VIX decides to fill this gap in a day or two, that's gonna be, the market's gonna go up a lot that day. So what do you got to say about that?
I would say so this is something that I've been working on over the past couple of weeks, new strategy. But to me, it's like football. Trading is like football. So you got your fundamentals, you got your playbook. You might know certain teams' playbooks, but until you create your own playbook and your own plays, it's not as beneficial. So this is what I'm thinking. Look at the candlesticks like people. Like, a lot of traders do that. If a lot of expert traders look at the candlesticks like people, yeah, buyers and sellers, but they're not just looking at buyers and sellers. They're looking at the methodology behind it, and why these buyers or sellers would make certain moves, what would happen, and why we're dropping. So if you're looking at why we're dropping, it's because those people got stopped out. And a lot of trading today is algo trading, algorithm trading. It's like it's
Oh man, I'm really glad you brought that up.
a lot
Yes,
of
so much of it is algorithm trading. Man, I'm looking. You're never supposed to do this. But you're supposed to never look back. But I'm looking back. I'm looking at those puts that I was scalping earlier today, which I sold. I sold good. I got like 100% on them. Did good. But I bought them for $40 a piece. They're currently worth 230 a piece right now. Oh man, I didn't know if we were gonna keep dropping or not. They expired today. Super, super risky. So you got to take what you can get while it's there.
That's good risk management, though. Risk management, because a lot of people would.
Yeah. Now I'm swinging some puts. I'm definitely swinging some puts, but not that expired today. So You know, but yeah, I just wanted to pull that up real quick because
I don't want to pull up what my trade was. I had SPX puts. We're not going to talk about it.
we've been a little early, man. So that's something that I'm trying to consider, right? Is that we're forecasting, right, these events. But you know, I think maybe we've been going a little bit early on some of the stuff. And you know, so that's kind of why I'm a little hesitant right now, because I can't tell if we're about to have a big drop, you know, or if the market's about to go up and VIX is about to drop, you know. So for right now, you know, you kind of just want to sit on your hands if you're not too sure. And you know, I got some bullish positions still on like Apple, Tesla, AMD. You know, I got long stuff on some other things, but you know, in the meantime, you know, these puts are really saving and, you know, making the money. That's where the money's at.
Yep. You guys want to say something, Aon?
Yeah, just on the topic of the puts, I just jumped in some 45.50 XPX puts for Friday. Maybe 11 minutes before I sold for sure, but maybe 15 to 20 minutes ago. And I just sold them for a 12K profit. I just posted it in Discord.
Balling, beautiful baller, man. All right, let's go
That's what
ahead
we
and
do.
take a look at that. Let's go to the Discord real quick. Let's go to the call out, some of the stuff that we're talking about here. Okay. So that's Aeon King was just talking now. And as you guys can see, $12,000 profit. And you know, let's look at that. When did you purchase that? 11 a.m. Right?
No, that was recent. That was
Oh
like
no,
15 minutes ago.
yeah, look at that. 3:41 p.m. Closed at 3:53. 12-minute trade, $12,000. Join the Discord if you guys want to make $1,000 a minute. Aeon's doing it. You can do it too.
Honestly, it's a collective group of individuals with the same mindset and the same goal. It's no trolling. It could be something as simple as what is a candlestick or what is bullish, what is bearish. Like, you know, you could start from bare minimum and we'll work with you. So
why don't you go over some of the call outs real quick? You can see my screen, right? So describe the main call out page, guys. Right here.
So call outs, me, I am Mansa Leon under there. So it would be me.
Up here.
Yep. Aeon King is, you know, Aeon, he's on here with us. Jay Garducci, he's one of our elite traders, as well as Zach, you know, Zachly, one of our elite traders, and Ron. So Ron, you know, he has a Spider-Man. His favorite stock is Netflix. He's another admin. So we post our plays in the call outs, but we don't always have the plays that we want to get in because it might be a lot more. So you might have a lot of plays that you want to get in, but you might just choose these. So we have suggestion plays as well, so that we've done the due diligence on
suggestions play.
Yeah, we've done those due diligence in like the spreads in there. There's calls, puts.
Yeah, look at these today. 11 a.m. There were some puts and suggestions plays. I'm sure all of those are up very, very much, you know, very well right now. Ron's got some Netflix in here. You know, I like to post a lot of debit spread, you know, suggestions in here. There goes the shop. These are like one of the shop fills that I got, the beautiful shop fill. So, you know, that I got lucky on. So that's the suggestion plays. Stock suggestions basically goes over the same thing. You know, Leon really leads the way in a lot of these suggestion plays, you know, constantly putting out some stuff in here. You know, we do, you know, suggest crypto as well in here. Okay, that's the Aave token. That's a crypto lending platform running on the Ethereum network, right? That's pretty big. We have some Matterport shares right here. That's a good metaverse play. And then recently, I kind of want to bring this up, Krbn, okay, Krbn, Crane Shares Global Carbon Strategy ETF. Now this is kind of a hedge play against the rising prices of energy in general, right? Whether it's clean energy or fossil fuels. Basically, the way that this ETF works is the price of carbon goes up, then the price of this ETF goes up. So, you know, that's something really interesting. The image I selected, you know, it showed that it's up 100% over the last year. And that's even after down from its all-time highs. So, you know, kind of a good one there. Nest eggs. Why don't you go into nest eggs and describe nest eggs for us? Okay.
Okay. Nest eggs. A lot of people say leaps. Leaps are when you have stock options that don't expire for, let's say, 3 to 6 months or more. Like we like to say 3 to 6 months or more because, you know, some people might say a year, some people might say 6 months. Our gauge is 3 to 6 months or more. So we've been looking at, year out leaps, 2 years out leaps, or like it
Yeah,
could be.
Ron's got some call outs in 2024 for Arc F and Fuel Cell, you know what I mean? He's been adding some stuff to Amazon, selling some Carnival Cruise Lines, nest eggs for profit. That's nice. It's good to see that. Adding some Netflix, Aeon was recently just mentioning how, Netflix is Ron Reed's favorite stock. So of course he's playing that one.
Mm-hmm.
Definitely like that. And then there's small cap call outs too, right? So what's like the difference between call outs and small cap call outs? Like $100, right? Is $100 above would go into call outs.
That's the bell.
And then
So call outs are
mhm,
regular call outs. Small cap would be, I think, maybe 200 and below, maybe 150 and below, 150 and below.
mhm.
Those are for people that don't really have the massive amount to, allocate to certain stocks or shares or whatever. So we have the small caps. We also have stock call outs. So when we buy stock, it could be crypto or it could be regular stock. All right. So we'll just hashtag crypto in there. There's certain stocks that are ETFs that you can buy 15 minutes after the market closes, like it just did. So you can see Kishu I bought there, Roblox. So these are things that you want to put in your long-term account.
Bitcoin,
Nest egg account. Don't look at it. These are things that you just, okay, I don't need this money. I'm gonna spend this couple $100 on McDonald's or whatever going out to eat anyway. So I'm gonna buy some stocks. I just bought my son some stocks. So these are the stock call outs that you want to look for. Earnings plays are really, it's kind of risky because earnings, you never know what's going to happen. Over 2020, earnings was booming. Like a lot of people were making money with earnings plays. And I think because retail traders will make a lot of money, they had to switch the game up. So now they switched the game up, and a lot of earnings have been doing really well in like dumping. Amazon did it twice. Amazon and Apple are the only two companies to actually make over $1 billion in a quarter. And I think Apple did it. No, Amazon did it the most. Amazon did it like the last 3 or 4.
Was that recently?
Yeah, Amazon did it like the last 3 or 4 quarters, over $1 billion in revenue. So it's pretty crazy because they're multi-trillion-dollar companies, but with over $1 billion in revenue and blowing away estimates, it dumped like $100 or $150 or something like that. That to me is, once again, when you're looking at what other people are looking at, like, retail traders and also big money institutions, okay, why would you want this to happen or not want this to happen? So earnings plays are risky for that factor. And then you got to look at what the outlook for that particular stock that's having earnings is. So like Tesla, we're estimating that's going to be really well, but you never know because it depends on the outlook of the company. We look at Tesla like Bitcoin because Bitcoin, like it's like the Bitcoin of EV, electrical vehicles. Every company that has an electrical vehicle has to reference Tesla. It's almost like a prerequisite.
Any article you see, whether it's Rivian, Lucid, whether it's Ford, whether it's Apple, even talks about getting into the. They also, anytime they mention those, they have to mention Tesla, and they all say, basically that that Tesla's the benchmark, Tesla's the standard. That's where it's got to go. So I definitely agree with that, man. And you're always pointing that out. We're always pointing that out. Anytime anything EV comes out, they're always comparing them to Tesla. So Tesla always tries. A lot of people give Tesla a lot of hate, but at the end of the day, people know it's the benchmark when it comes to the EV market.
Yep. And the thing is, like, so when the EV market is moving right now, like Rivian, it's looking at the methodology behind it. Okay, so Rivian came out, Ford had like 13% in the company, pre-IPO. Amazon had like 17% in the company pre-IPO, and Amazon had a deal where, you know, Rivian was supposed to do a couple of vans and like delivery vehicles, and then Ford was supposed to do like a joint thing, and that fell through. The Amazon thing, to me, it's still in the wind, because until I see like a vehicle, till I see it like actually coming to fruition, you know, still talk. But why? That's my thing. I'm looking at the why. So everybody is trying to find that Tesla rival, and that's what Rivian was made out to be, the Tesla rival. They literally mentioned it over and over in ads and over in articles. They had big backers. So if you're trying to get, let's say you're into music. If you're trying to get into music, it would behoove you to like have Drake backing you. If Drake and Beyonce backed you, bro, like you're pretty much in there like swimwear. So that's what Rivian did, in my opinion. I think the numbers were fudged. I'm not going to say fudge because that makes it sound incriminating, but I think the numbers were not realistic because they were going off of Tesla. They're not going off of Rivian because they don't have any revenue. They don't have any profit. They haven't sold anything to make them at that level of evaluation. Like, to me, it was bound to be at the price that it dropped to. So just not making it too long, everybody has to mention Tesla. So that's why we think Tesla is going to do really well on earnings, because they're not really worrying about anybody else. They're running their race. People are trying to say, oh, you know, this crash, that crash. And Tesla put out that, you know, it's really incorrect data. If you look at the crash rates of actual vehicles, you know, it's if you look at the actual data, you'll see that it's propaganda.
So
why is this happening? By the way, I think Tesla is going to drop to about 940.
Let's go ahead. Yeah, let's finish the video out, and I'm going to draw a head and shoulders right here. Let me know what you think of it, okay?
Yeah. I'm on
right.
board. Right
So there. I think that, you know, this is kind of like a little bit of an ugly, but this is kind of going to be our head and shoulders right here. You think Tesla fills this gap before earnings down here at 950 area?
I think it does, because VIX closed at 2380 or 2385.
I think like 2391. Somebody Ammo just said in the Discord closed right there.
Oh yeah, yeah. So it went right back under that 2385 resistance that I had. But yeah, so if Tesla keeps doing what it's doing, I mean, if
let's look at this on the 4-hour chart.
Let's see what it's doing. Tesla will drop to that. Like, it could be by the end of this week.
Yep. So that's like a full circle spinoff back into what we were just talking about when it comes to VIX. You know, if VIX keep rising, let's look at this right here. This is a very key support line kind of right here. This is where we closed at today, is right at this support. You know, if we break that, you know, we could be going down to that gap fill. And honestly, that would be amazing. If we can get that right before earnings. Okay. And then let's say they have good earnings and people react well to earnings and this thing goes off. I mean that, you know, 950 is going to be a level I'm definitely watching a lot. You know, basically, how do you feel? You feel the same kind of? What do you think it's going to do short term, like tomorrow? You think Tesla goes up tomorrow or this week? You think it finishes up a little bit higher than 993 or you know 995, or you think we go below there?
You know, my brother-in-law, my brother tells me this: never get in the way of a train. So it's like I could think differently, and I could have my reasons for doing so. Like right now, I could see that on that head and shoulders, there's also a bearish divergence. So I could look at the bearish divergence and I could say, okay, it's a bearish divergence, but it could break the bearish divergence if whatever, like that's like imaginary thinking. I could have that in the back of my mind. Okay, if it hits the support, then it could go and it could fire off and it can go 100, 200 points. But I mean, realistically, if the whole market is dumping, we're pretty much going to reach that 940 range. It could be by the end of this week. And I think today it almost lost support. Tomorrow, if it loses support, it's a wrap. It's definitely going down there.
Yesterday was real crucial, man. It was a big fake out, I think, in the market. You know, I had this inverse head and shoulder charted up here, and this was basically our neckline that we needed to break. You know, our breakout level for this pattern, and we kind of just got stuck short right there. You know, and just fell right back down. You know, it looked pretty good. We hit resistance there, and just tank just went down after that. You know, so something kind of maybe not the cleanest, but kind of a little bit of a head and shoulders going on, even on smaller time frames. So we have that bigger one, and then kind of here, could have been a little head and shoulders right there. If you look, we came back down to this level right here, where the beginning of the head and shoulders would have began, boom, something like that. So a lot of stuff is oversold right now, in my opinion. It's hard to tell if it's gonna recover soon or go back lower. So that's why we're kind of just relaxing right now, not going too hard in the market. Just trying to hedge ourselves with these puts, and they've been paying very well. And when you can catch the drop, like Aeon did earlier, or like I did earlier, or as many of us do every day, on some day trades, that's nice. So I think this was a good video. We talked a little bit about some crypto. We talked a little bit about the stock market, some augmented reality, some virtual reality, a little bit of Tesla, a little bit of understanding about the VIX. So we'll be looking to continue these and do some more. Go ahead. What do you got to say?
I do want to mention one thing before we go. So go to /VX, and I'm going to get this little tidbit. So we talked about VIX, but go to /VX. Now, /VX, if you look real close.
What chart? The 1 hour, right?
Yeah, so /VX is the VIX futures. All right. Now, you see it closed that gap today right there, right? It closed that gap, right? And then it went back up. So it bounced at that zone that the previous high was at. It bounced
right here.
Yep, there you go. It bounced at that little zone that the previous high was at, like exactly where he put that. And then it went back up. Bounced again down there. And, if we utilize everything that we know. So that's a W pattern, in my opinion. Okay, pin bar, bounced again, and then it went above the previous high just now. So it closed above the previous high, which is bullish, which means we're probably going to continue bullish. But I do want to say that,
yeah, look at that close, dude. It literally closed right on top of the high.
Crazy.
It's going higher.
Yeah, so that would be immediate support. And then I'm pretty sure you can see where that pin bar is. That's going to be the immediate support as well. Below that one, where the pin bar is, I would put it above, not below. Yep, like dead above. Boom. Yeah, and then extend that.
We'll extend that to the left.
Yeah, you can probably see that the other candles. Boom, there you go. So that's your support, and that's where we're looking at the drop. So let's say it does get below 23.96. We know it's going to drop to that level, and it could pop. If it doesn't pop at that level, we know it's going to drop down to that next level that he has down there, which is 22.77. Now, if you scroll out, you should see a gap around 17. I want to show them that before we leave, to show that, okay, just looking at multiple things here. If you scroll out, you'll see to the left that there's a gap to just look for around like 17 or something like that.
I think I got to go back a little bit further in the chart. Just give me a second.
Matter of fact, I'll give you the exact date. The exact date is.
Oh, I see it, bro. I see it.
Yeah. Yeah. Boom.
All right, there we go.
All right, now, why is this important? Why is this important? Because what we're looking at on the RSI is a bearish divergence, folks. And I wouldn't even put the, I would put it on the bottom. I would put that on the bottom.
This one?
Yeah. Like a bearish divergence right there. And that's telling us it is supposed to be going down right now. So what I'm thinking that it's not going to go down right now. It's just too much negative news. You know, the 10-year Treasury index is going up or went up to the highest level it's been in like what, 10 years, 30 years, something like that.
20 years, something. Yeah.
Yeah. You know, it's like the US and the Russia thing, you know, might go to war. It's too much in the air right now. So if we do drop, my point is we could drop and we can go stupid, dumb, bullish, and we can go all the way down to that 17 level that he has right there. So just something to look for. And as you're looking at VIX, you can see that double top up top. You can see that double top. Yeah. So yeah, bearish divergence, clear as day on the 1 hour. Yeah. So I think he had to go, but oh, here he comes. Yeah, bearish divergence.
Hey,
Clear.
sorry, my mic was muted there for a little bit.
That's all good. So yeah, that's all I wanted to say. You know, the bearish divergence, we're looking out for that, because when that actually breaks that trend line that you have right there, I'm looking for it to find support at one of the, you know, supported demand levels. If it doesn't, you know, we could be off to the races with the bullishness. And that means VIX is going to be bearish, market's going to be bullish. We're going to be looking at stocks we can find shares for, find leaps for, you know, shares in stocks or leaps in stocks like nest eggs for, let's say, Shopify or, you know, Amazon or Tesla, all these big money companies, Roku, Baba's been doing stupid bad, like, you know. So with
yeah, let's go ahead and look at a few of these. Okay, so you know, we'll look at Shopify. Okay, and we'll just kind of give a market breakdown of how bad everything has been recently. Okay, so things like Shopify. All right, currently down 41%, over 40%. You know what I mean? Crazy, right? Spotify.
Everybody
right?
Shopify. That's
from down from its highs. Okay.
And look at Shopify.
47%.
Spotify. Look at Spotify. If you could actually look, I would say, what month is that?
Bro, this thing looks like a Head and Shoulders to me. And February, this thing was bad.
Let's go out to the monthly. There we go. So now if he puts that trend line that he has and he makes that, you know, connect with the candles that it's under, let's say that pin bar right there, make it connect with that pin bar.
What, this?
No, make a horizontal one.
Reese. Sorry, my dog.
It's all good. So that pin bar, like right there, that one. No,
right here,
green one. Make it horizontal across the whole level. You see what I'm saying? Yeah.
Support line.
Yeah, support line.
Okay.
But
I got you.
With the open. Yes. Yeah. Right there. All right, boom. To me, it already broke down.
Mm-hmm.
So if you're looking at that next level of support, I would draw another support line. You already know it. I would look at that green candle up there, and I would set it, that green candle that's making a bullish engulfing.
I like one right there and right here.
Yeah, yeah, yeah. Actually,
Like around these areas.
I would. That's cool. I would put it up right there. That's why I would put it up. Because to me, more is hitting. Now, if
Yeah. These are good. I mean, 1, 2, 3, 4, 5, 6, 7, 8. Like
more is hitting right there. So that level that you had is a support, but to me, that's the major. So
oh
that's
yeah, no, I just had to finish drawing it up.
yeah.
But
That you said we're already dropping. So if you wanted to get in Spotify puts, like to me, that's like no brainer right now. You know where it's going.
did I put Spotify puts in here, man? No, I didn't put that in suggestion play, man. I made a video today though. I made a video today on it, bro. Let's look at the option chain for it. There's a super safe, in my opinion, Spotify put that's gonna print money. For February 18th. Okay, so if you look at the open interest, right, the 160 strike has 453 open interest, and pretty much nothing else is in the hundreds except for the ones that are currently in the money, that are the 210 and the 220. Both of those have about 1,000 open interest. And those are pretty right. Those are deep in the money. We just looked at how the support for it, right, is at 180 and 150, 155 right there. What I really like is the 180 and 160 vertical debit spread for the puts. So you basically buy the 180s and sell the 160s, and the spread is pretty tight on it, right? Because these are two of the most liquid ones, the 180 and the 160. Um, and it's a $236 play for a max profit of 1,765, and the break even on it is only 177. So I mean, if we put the break even on here at 177, real quick, that looks like a pretty, if February ends up being a bad month like a lot of people think, or if this thing just continues its downtrend like it has, um you know that's basically, the break even is just right below that major support level that we just charted up, you know? So I think that that's a pretty good play right
Down
there.
to the daily. Go back down to the daily just to kind of look at things rationally. Yeah, so we're just starting.
So this is our head and shoulders. We haven't even touched this 52-week low again, at 201. So, we probably, retest that, maybe find a little bit of support right around that area, around here, for now. And then, maybe bounce a little bit and we come back down. And yeah, I mean, on this other chart I got here, this, it looks like a head and shoulders to me. I think this is going to be our projected move. And, right around here is my neckline. And, I could see this thing going all the way down to 150. If this thing really plays out hard.
Yeah, I like that too. I like that too.
So, but yeah, so anyways, so 150 is pretty dramatic. That would be a pretty significant drop. Let's see. I mean, for it to go all the way back down to there, that's over, 25%, 25, 30% drop it'd need to have in a month, which it could have that, but I'm not too sure about that. I definitely feel a lot more comfortable with the 180, 160 put spread, with the break even at 177, because I think that we'll at least be able to see 177, maybe touch it, and if we do break below it, then we should be able to get the max profit on that spread or close to it, and that's almost like, that's not a 10x, but 260 to almost 2,000. That's a good play right there.
And I like that. It's a nice little cheap play. I like it. I would go like a month out though. Like minimum, it would be a month out.
Yeah, that's for February 18th expiration.
Yeah.
So that's like exactly a month, basically, for now, 30 days.
Yeah.
You know, and so it's got some decent time decay on it, or with the spread, pretty decent. So yeah, that's basically, I just kind of made that one earlier in my video, earlier today when I was looking at Spotify, because James hit me up about Spotify, and he was like, man, he's like, my money is about to print with this Head and Shoulders on Spotify.
And I like going for plays like that as well, like plays that are cut, clear, and cheap. You know, why spend the money if you can make a certain amount of money from less? So why not
Yeah,
get more contracts for a lesser amount of money that can make you 100 or 200% on that money? And that same money that you would have put in that big play, you would make more with that small play.
Yep. And I mean, that's a pretty liquid one. You could easily grab 10 of those, get 2,000, and that's $2,000 right there, potentially turn it into almost, 20,000, so it's all about scaling and, risk management, things like that. But I gotta go.
Yeah.
I think this is a good time to wrap it up.
We'll do another one.
But yeah, we got to do some more of these. And so let us know in the comment section below if you guys like these. Give us some ideas for some more stuff that you guys want to hear in the future. Okay, what topics were your favorite? Did you enjoy hearing about crypto news? Or do you like us talking about the VIX and the futures and the stock market? Or do you guys prefer specific tickers? Okay, do you guys want us to just come on here, break down a couple things like we just did with Spotify? We could do some things like that. All right, so let us know in the comments below. Join the Discord. Okay, of course, the link to join will be in the description below as well, and then you can use code Zachly to get a discount on your membership. Okay.
Yep.
So any last words?
Man, we're not a huge, super grandiose group. And I think that's one of our strengths, because as we grow, we will be knowing every person that's in there. And it's not like, you're not heard, your voice isn't, it doesn't matter. We take all constructive criticism into account. And, a lot of things we've been right about. It's just not been documented a lot. Like he mentioned.
Yeah, that's the main reason we're doing these now.
We're just doing this now, so it's on record, and it's easy. It's easy for people to just throw out like just random cap, is what I would call it. Like random fake predictions, like, oh, I think this is going to do this. It's because like if it does do that, then you could say, okay, 4 years ago, I told you that this was going to do. Now, what we're doing is like we actually believe what we're saying. Like ARCX, get ARCX right now while it's below $20, because as
look at this, bro, ARCX is bleeding.
Yeah, it's literally every day is becoming an all-time low. But just like Jordan's, it just came out. There's not really many space stocks, but when there is space stocks, I think Starlink or SpaceX is going to go public within the next 2 years. I would say next 5, just to kind of give it a cushion. But in the next couple years, Starlink or SpaceX is probably going to go public. It just makes sense. It just makes sense. And
yeah, I like ARCX shares.
ARCX is going to have those shares. So times like this, where actually you can see right there, triple top, it just broke down.
It was a quad top. 1, 2, 3, 4.
Yeah, broke down. So it's, we're dropping. But stuff like this is what we called like MP materials. They're like second in rare earth materials, and they make neodymium. I forgot the name of the actual mineral, but it's a mineral that you need for electrical vehicle stocks, like electrical vehicles, like wind turbines.
Electrical vehicles, for computer chips, for all of that stuff.
All that. Like they're second in the world, So that's another one that we called when it was like at the low of your trend line, actually. Like I believe that was,
I know. That's why I have that trend line.
yeah. And it went all the way up to like $53. So,
that's crazy.
Like nobody's looking at. Another one before we go, and I know we've been in the conclusion for like 15 minutes, but Krbn, Kpn, it's a company, Krbn. They're actually the owner of the trademark for metaverse glasses. They own the trademark for metaverse glasses. Now I think
looks good right now. If you look on the weekly, it's coming up on the 200 SMA right there.
Yeah, and I think,
and that's a key support level right around here. We never tested this again as support after making it resistance. So we could come down to like close to $2. If small caps keep leading, especially, which that's I think that'll be my final closing statement is You know, get some put hedges on any small cap stocks that you own, because you know they're just making all the money shorting it, bro. And it's just, and the only people selling are retail bag holders. There's no institutions out here selling. It's all algorithms, as you mentioned earlier. It's like 70%. And you know, and they're just pumping the steam. They're like, okay, well, this thing keeps going down. It's got no buy volume coming in, so we're just gonna keep shorting it, and they're just making more money. And you know, the only people losing are the people who are locking in permanent losses right now. So you know, there's two ways to do things. You can have stop losses and get in and out of stuff, but a lot of these things that we're looking at right now, and speaking of, for some long-term investments, you know, buy some puts and just take profit on puts along the way. And you know, you can go back in and buy shares with the profits from your puts, you know, at a lower price, right? So maybe
Remember
have a
this.
hedge on some Copen. You like maybe have a March or a July put for the 2 strike, right? And buy some shares here, and in case it does fall below 2, you can sell your, you know, your 2 put for some profit, and maybe buy some more shares, you know, while still having skin in the game in case Copen just ends up going higher and doesn't fall.
And remember this, I know he said last things, but so when buyers sell, like he said, you know, it's a lot of algo trading. When buyers sell, it's like math mixed with football. When buyers sell, that's a negative. Plus and a negative, that's a negative. All right. When buyers sell, it's going down. When sellers sell, that's a buy. So when sellers take profit and the sellers are selling, that's a negative and a negative, positive. That's that retest. So sometimes if you see a retest, but it doesn't go below above that previous high, those are just sellers selling. And then at that top of that high, it doesn't get above that because the sellers buy again, which is a negative. So, you know, got to use everything that you know in the market.
Yep. So you know, we'll be making some more of these. We'll try to get at least one out a week. But you know, in the meantime, you know, we might make these every other week, something like that. But look forward to more of these coming. And you know, I'm signing out now. All right, guys. I'll see you next time.